Today we welcome Martin Mao, co-founder and CEO of Chronosphere.
Recently, we had a pretty small R&D team, like less than 10 people. And that small team ended up in a large 8-figure deal against a public company that's worth billions of dollars, has thousands of engineers.
In this episode, we talk about Martin's amazing discovery at Uber, where they had a huge problem to solve and how that helped inspire them to go and build Chronosphere that it is today.
I think for us, it was this moment of realization that the market opportunity was huge. And if we weren't going to take that leap of faith, we'd probably regret that decision for the rest of our lives.
We talk about his journey of embracing sales.
You have no choice. Like if the company needs this, just like if your child is sick in the middle of the night, like you're going to get up, you're going to take them to the emergency room. You just have to do it.
And we talk about grappling with product market fit in a very competitive market. This is his playbook. This episode is sponsored by PGAI and Seller. Go and discover how these solutions can help amplify your sales execution. Check out the descriptions below. Welcome to Hunters and Unicorns. I'm Simon Kutis and I'm joined by my co-host Ollie Kune.
Welcome back to the show, everyone.
And it's with great pleasure that we introduce Martin Mao. Martin, welcome to the show.
Thank you for having me. Looking forward to chatting today.
Absolute great pleasure to have you on the show today, Martin.
By way of an introduction, you are co-founder and CEO at Chronosphere. And Martin, it's been an incredible journey, right? You guys are in an amazing phase of growth. You've had, an incredible start so far, and I know that there's a long way to go. But as a real starting point for today's session, really wanted to kind of go back to the beginning as a founder when you're trying to establish product market fit. Tell us a little bit about that journey and where it all kind of started for you.
Yeah, happy to. It actually started for us, I would say, even before we founded the company 6 years ago. So myself and my co-founder used to work at Uber, the ride-sharing company, and we ran the observability team there. And as you can imagine, we were tasked with solving the observability problem for Uber. And that ultimately led to us building a lot of the underlying technologies we now use here at Chronosphere today. And I think for me that the real journey started back then, where for Uber, they were a little ahead of the rest of the market. They decided to adopt containerized infrastructure and technologies probably back around 2015, a few years ahead of the rest of the market. And what that gave us was a unique place where we could see some of the problems that this new architecture was going to introduce to observability, and allowed us to solve the problem internally at Uber before the rest of the market faced that problem. And then ultimately in 2018, 2019, when the rest of the market decided to start adopting this new architecture as well, we were already in a position where we knew the problems the rest of the market was going to face. And we had already been lucky enough to solve those problems once at Uber. So it really positioned us well even before the company started, and ultimately, honestly, convinced us that we should even start a company, and there is a market to go and to serve, and there is a product here that's differentiated enough. And that was what ultimately spurred us to even start the company in the first place, before any, you can imagine, conversation about product market fit or any product or company there.
So tell us about that leap of faith that you took. So obviously you're working at Uber, you come from an engineering background. What tell us about that process and what the early kind of the early days of that process?
Yeah. So there was actually one moment in time. It was at a conference called KubeCon, the Kubernetes conference in Seattle in 2018. I think like December 2018, and we were sitting in the crowd, and that was the conference where all three major cloud providers and Oracle as well, and VMware, and all of these companies decided to get behind Kubernetes as the common containerization platform. They were all going to support that. And in that moment, everything clicked where, we thought, okay, in the future, every enterprise is probably going to be or have a multi-cloud or hybrid architecture. We couldn't imagine an enterprise picking one single cloud provider. It just seemed too risky and probably not how the world was going to turn out. So in that world and at that conference, what was really clear was, instead of implementing your infrastructure multiple times, Kubernetes was going to be the unlock to building your infrastructure once and then running it in those multiple environments, right? And that, for very different reasons for why we went down that path at Uber, that made us realize that the rest of the world was also going to go down this path and run into the same challenges when it comes to observability that we ran into at Uber. And I think that was the moment of realization that a market does exist. Because when we were creating the technologies at Uber, we never thought that the market would go this way. We were just building cool tech for one tech company back in the day, right? So it was really a realization that the market would really be there. And I think for myself and my co-founder, having gone through that journey at Uber, and actually at the time, right before we founded, he had a young family. My wife was pregnant at the time, so probably not the best time to start a startup. But I think for us, it was this moment of realization that the market opportunity was huge. And if we weren't going to take that leap of faith, we'd probably regret that decision for the rest of our lives. So that's what spurred that original sort of want to go do this there. I think the advantages we had are, again, we went through all of and experience all of the pains that the rest of the industry was about to go through. And not just that and having that experience, but we also had a lot of the technical solutions to how to solve these pain points. And luckily, we had open sourced a lot of those solutions at Uber. So there were solutions that were available both to the broad market and obviously to myself and our team. So it really gave us, I would say, a running start into the company. And we founded it, I think, May 2019. So we're actually about to turn 6 next week here. And you can imagine with that start, it was a big market, a big proven TAM, observability. You can imagine there are a lot of incumbent, very valuable companies in the market. We had an insight into a pain that was coming, and honestly, a wave of disruption coming to the market, because generally when you try to disrupt the market, often just product innovation perhaps alone is not enough. You're trying to ride behind the wave of some disruption to the market. And for us, it was this movement to containerization. And we had the technology already. So I think we had great ingredients to tackle the market. And that led to a very clear plan up front of how we were going to tackle this product market fit problem. And I think luckily for us, it ended up working out quite well.
We work with a lot of founders, right? And those first kind of years are so crucial. It's an obvious statement, but there is a kind of a transition and a mindset shift that as a founder you really need to embrace in order to be able to kind of build a business that is scalable, and that is around kind of your view on customers and the problem, as opposed to having an idea of a product that you want to sell. Tell us a little bit about your journey in that phase, and perhaps where you started and how you started to kind of develop your views on what you should be focusing on.
I would say for me, and I think this is pretty typical for a lot of tech startups, both myself and my co-founder are engineers by trade. We're very technical, right? So our specialty was the technical product and the technical solution. When I look at it, it's probably in terms of like product market fit, initial product market fit, it's probably on two folds. It's not just the product. And I think a lot of founders think if you just have the perfect product, you have product market fit. I actually think it's a little bit more than that. So, we can dive into that in a second. And then obviously the role of the founder as well, and how that often changes, because, it's a very common pattern that you have two technical co-founders, and generally one has to focus, I would say, more on the business and more on go-to-market, especially initially. And perhaps the other focuses more on the product and the technicals. I think on the first part for product market fit, I think one of the common, perhaps misconceptions is, you build the ideal product somehow, and all of a sudden you find that fit, you solve that pain. And I think what's interesting and what we've realized is, especially in a market like observability, where it's not just one segment or one end of the market that needs it. You can imagine, observability is visibility and insights into infrastructure, into applications, into the business. It's a need for all companies of all shapes, right? So the market and the TAM is large. And for us, it's interesting this in the sense that, in my mind, a product actually can't be ideal for both the top end and the bottom end of the market, because even though it's the same type, it's an observability platform, for example, that what the top end of the market and the pains that they're solving for is very different to what the bottom end of the market is solving for. So it's not just the perfect product, it's almost the perfect product for the perfect segment, right? Because there's different pains and different ways you're optimizing that. And also, along with a particular segment, generally a go-to-market motion is more ideal. So I actually think it's not just the product, it's the perfect product for the perfect segment with the perfect go-to-market motion. The combination of those three, I think, ultimately gives you, in my mind, that product market fit there. And, for us, luckily, we were pretty clear at the beginning what that was for us. You can imagine we solved the problem for Uber at pretty large scale. We knew that the property advantages of what the product had was, cost efficiency, scale, performance, reliability. These are all properties and pains that the top end of the market had, right? Like the folks at the bottom end didn't have that. So it was very clear for us that the technology and the product advantage we had was geared towards the top end. And if you think about who cares about those pain points, especially cost and scale, it's generally not the end user, it's generally the buyer. That then led us to, a very typical sort of, I would say, enterprise sales go-to-market motion as opposed to a PLG-led motion. So I think when you think about product market fit, I think it's more than just building the ideal product. And for us, it was both obvious based on just the technology we had built at Uber, and it happened to pan out that way for us, for sure. And I have a lot of other founders that I work with or advise, and I often see that they have a great product, but they're aiming at the wrong end of the market with their property differentiators, right? And they have the wrong go-to-market motion. When they change those, actually it's the exact same product, and they've been able to find product market fit from there. So, I think there's that side of it. And then obviously, I think, as I mentioned earlier, and this is a well-known, I think, thing that generally the founders have to be able to sell the software before you hire, even your first sales reps, or, you bootstrap your go-to-market team. That is definitely true. I also think that, as you scale, also generally either one of the founders, has to probably continue to focus on the go-to-market part of the business. And, for us at Chronosphere, that's me, and that's my role. However, over time, you can see a world in which, perhaps both founders don't want to do that, or, none of the co-founders want to do that, at which point you probably have to bring on a president or CEO or somebody who has that focus there. You definitely need to get past that initial phase and be able to sell the software initially, for sure. And then, as you scale, I think it's a decision. But I think there are big advantages to have one of the co-founders focus on that. And that is ultimately the role that I ended up playing. So, definitely they don't let me anywhere near the keyboard to write code anymore. And I'm definitely a lot more aligned and focused on the go-to-market side of the house than I am on the R&D side of the house.
Talk to us about that first experience. You've created this product. You've got yourself to a point where you've got something to take to a customer. Yeah. Talk to us about that first customer interaction that you had. And I'm guessing it would have been yourself that would have then gone and had that interaction around the validation of it and seeing, because you've obviously got peers, so I'm sure your peers played a part in that. But talk to us about that process of going and validating that product market fit and that first experience.
So if we go back to those days, we had the technology from Uber, but it wasn't a product. We still had to build a product around that open source technology there. It definitely gave us a head start, but it took us about 6 months to actually have a SaaS, call it MVP product, I would say, that we could actually take to a customer. You can imagine, the company was just myself and a bunch of engineers that were building the product, right? So my role was really, who are we going to sell this to? Who can we go talk to? And early on, if you looked at some of those pitch decks, they were definitely really terrible, for sure. No polish there. But I was trying to get essentially through to people who were in my role at Uber, so who owned the observability function, who was in charge of buying these tools, and talking to them about some of the pain points that I ran across personally and whether they have those pain points. And you can imagine, back in 2019, honestly, not a lot of companies had those pain points yet because I was so early on the containerization journey. But we did end up finding those companies, and it was pretty clear early on that there was a direct correlation with the footprint of your containerized environment and how severe that pain was and how much of a fit that was for our ICP, right? So there was definitely discovery there, and it was really talking to folks that were really in my role at Uber and telling them, hey, this is my journey. I ended up having to build a huge team and build the technology internally because a SaaS vended solution did not exist in the market back then, but it does now, and this is what we do here today, and these are some of the pains that we can solve for you. It was a lot of those conversations. It was a lot of, I remember my Friday afternoons were just I think on LinkedIn befriending 500 or whatever the maximum connection count was for that week before they would cap you off on LinkedIn and sending outbound messages to those folks to try to get them on a call. I would say it was a pretty typical outbound type of motion, but it was just me doing it by myself in the early days, and getting through to some of those conversations and actually having the I would say the pains we're trying to solve resonate with the very few folks that were advanced enough back in those days, and then convincing them to take a pilot or a trial of our piece of software, which now makes sense. Obviously, that's what you're meant to do. But if I was to really look back at some of those examples, I was like, wow, these pretty established companies were taking a bet on like a 10-person startup, trying to replace a piece of software which is pretty critical to their business. That's a pretty big bet that they took, and I think that to me was just an indication of how severe the pain was that they were trying to solve. If it wasn't a severe pain, I don't know why they would have taken that conversation with us and why they would have even taken that bet and even tried our software. But that's what the early days look like.
This episode is sponsored by Seller. Seller provides a white glove treatment to every complex deal with their bespoke system, whilst ensuring you get the most value from your CRM for everyday selling. You've had Greylock come in at Series A. I know that's obviously, a little bit later on that, but it's obviously very, very early. But you did surround yourself with some pretty influential people that really helped, get you focused on the right things. Tell us about your kind of mind shift. How do you reflect on that process for yourself? Were you always focusing on the right things, or did you have to kind of adjust your views as part of that journey?
So I definitely had to adjust my views, and I think if I look at my role inside the company, it's probably the one that changes the most over time, and I think that's probably my expectation as well. Generally, the way I view these things is I do, especially in the early days, and now it's easier because we have leaders in every function, and we have folks in every role these days. But generally in the early days, it was wherever the company didn't have a role, it would be my job to go do that first, and not necessarily to do it well. I definitely wasn't the best sales rep, but I think to do it, to understand what was required, that would then allow me to figure out what type of profile we needed in that particular role. You're right in the sense that Greylock came along and did A. It was actually our first round was the A. We went and pitched a seed round, and we asked for a sum of money, which back in 2019 it was $11 million. Back in 2019, that was deemed too large to be called a seed round, so they just called it a seed A. But really, it was our first round.
How things have changed.
How things have changed, exactly. But
Yeah.
back then it was a large sum of money, and they said, "Oh, this is too big to be called a seed, so we're going to call it a Series A." It didn't really matter to me. It was actually our first round of funding right at the beginning with Greylock, and obviously, our partner there, Jerry Chan, has helped us immensely along the way. He has both a product and a product marketing background, and he had built a lot of products from the ground up at VMware, so that was very helpful. There was also a lot of, I would say, founders. I remember Steve Singh, I think one of the co-founders of Concur, and he was the CEO of Docker at the time. Dave McJanet at HashiCorp. Like, there was a lot of, I would say, other founders that were really giving me advice and helping me in the company relatively early on. On the go-to-market side, we were lucky enough to be introduced to some folks like Palm Apple, who has been a good go-to-market sales advisor for us from the early days as well. So definitely on the go-to-market side in particular, surround ourselves with a lot of folks that were trying to give us and giving us good advice for sure.
Can you go into a bit of detail around your transition now from very much an engineering mindset now into very much a go-to-market sales, especially when you've got somebody like Palm helping you? What was your initial reaction to Palm, and when he was giving you the advice? Were you leaning in? Were you standoff? Help us understand a little bit about that journey.
Yeah, I would say definitely leaning in, just because as an engineer, I knew, and you can imagine the companies I had worked at, I was so far away from the sales team, right? Like at Uber, we really had a sales team there at all. I'd worked at like AWS and Microsoft, but like generally those larger organizations, as an engineer, you're so far removed from go-to-market. Like I just didn't have any concept of how that would work. at all. Pretty early on, given our type of focus at the top end of the market and the value we were going to bring was at least initially more to the buyer than to the end user, it was pretty clear to me that we wanted to run a more typical B2B enterprise playbook more than anything else. And I think, having met various leaders, I was pretty attracted to, I don't know if it's the what you would call the playbook, but this concept that, sales, I think, is more like a science than an art, right? And, that I think resonated with me a lot as an engineer, because, like as an engineer, when you're trying to build something, it'd be crazy to go after a project and say, I don't know how long it's going to take. I don't know how much it's going to cost. I don't know what there are generally processes that, we've developed on the engineering side that will ensure an outcome. And I think the playbook to me is the equivalent of that on the go-to-market side is like, hey, it's not just by random chance. Like, you need to know each step along the way. You didn't have some predictability there and some forecastability there, right? So to me, I think it was really leaning in and learning about that more than anything else, and being brought into that. Because, you can imagine, as a founder who's not done this before, sales to me felt more like an art. And I think learning that it was more like a science was definitely a key moment there. And then for me, it was more about learning. And again, even though, I was the first quote unquote sales rep, I didn't think about would I be the best seller? Could I be the best, RVP? Could I be the best CRO? It's not the way sort of I viewed it. There are definitely people who we can and have hired that can do that job far better than I can. But I think if I could not understand it, I can't bring, because I also at the same time don't think you can just plug in a go-to-market team and an engine. You do have to adapt it to the space that we're in, to the market that we're in, to the product that we have. And I think that's what I bring to the table in partnership with that go-to-market team, right? Is I was the buyer we're trying to sell to. I generally know the space, and those are the things that I can bring. And I think bringing that in allows us to tweak the playbook and tweak the strategies there. So definitely a lot of leaning in and learning a lot, and then trying to, hire folks who, believe in that way of selling and that way of going to market, and then trying to work with those folks and sort of, combining both sides. But that's generally how I see my role. It's not that I'm running and know how all the mechanics work. There are, again, many people in the world that know that much better than I do. It's what do I uniquely bring for our company, for our product, for our market, and how do I stay involved there so I can help them tweak that strategy and optimize it over time.
Thanks to our sponsor, Pipeline Generation AI, the platform that researches your top accounts, creates insights and assets to help you engage more effectively. Elevate your conversations and transform your pipeline with Pipeline Generation AI today. It's interesting. We speak to a lot of VCs, and one of the things that a lot of them are leaning to a lot more now, much more often than perhaps in the past, is that they are investing in founders rather than the product. And part of the reason for that is because of what you've shared about almost being so open-minded. A lot of founders can be quite closed-minded about what they're building, and actually the feedback loops, you being out there trying to find things out and figure out, how important is that feedback loop of sales and engineering and product, and you being in the front line to really help you kind of steer more than just sales, but actually, being collaborative in the direction that the business goes?
Yeah, I think that's vitally critical. And I think to your comment with the VCs, it's true, because often also they're investing before you even have a product, right? So you have an idea of a product. There's no real proof yet that product is going to work. So I do think, at least for the very early stage VCs, they are investing in founders more than they are investing in the product per se. And you're right. And to what I said about the initial product market fit, I do think there is this, and part of my job in this role is also to take some of that feedback back to the product team, I would say, as well, right? So in our space, we had a theory that the original value props of our technology were going to be better suited for the top end of the market. We had to go and validate that for sure, because that's just a theory, right? But it wasn't just that. You can imagine for us, once that was decided and we got some early validation, what it really meant was, you can imagine for us building a product here at Chronosphere, like an observability product, for example, like a dashboard is a dashboard and an alert is an alert, right? Like these things are pretty core fundamental features that you may want or have. But when you're trying to design a piece of dashboarding technology or alerting technology for the top end of the market versus you're trying to design that even on the product level for the bottom end of the market, it's very different, right? Like for our product and engineering team, we are telling them, hey, assume there's thousands or tens of thousands of end users. Now design the product. Like it's a different environment, it's a different mindset, and the product turns out very different that way. It's tailored to one segment of the market. It's tailored to the go-to-market motion, right? Like we're telling them, hey, our customers care about like cost, and there's a lot of sensitivity to cost. They care about scale. They care about performance. That's almost informing the product direction in a way that is not just like build this one feature. It's almost like the foundations of the product are shaped that way. So I think that loop is really critical because, again, in my mind, it depends on the market, but in a lot of markets, like you're building the product for the right segment and optimizing for the right segment of the market, and that is, both a tie to the product, but also then generally the go-to-market motion is pretty tied to that segment as well. There's definitely pretty high correlations between the types of go-to-market motions that you would need there.
Talk to us about the process of moving away from founder-led sales now to actually hiring your first sales rep, first sales leader. What direction did you go and how did you know who you were going to go after?
It's definitely changed over time. I think initially, I was doing it myself. And again, the way I thought about this, and it's not just in sales, also in marketing and many other roles, like I go and try to do it first, not because I'm going to do it well. In fact, I'm pretty sure I'm going to do it terribly. But it gives me an understanding of what is required. How do I scope down that search, right? So for example, like testing out early on, it is, initially for us, it was more of an outbound motion. It was definitely selling to the buyer as opposed to the end user. All of that, proving that out, and, allowed me to look for a rep that had that type of experience. For example, right? I was going to find somebody from that type of background as opposed to find somebody who, has been serving the SMB side of the market with a PLG-led type of product, right? So like those are some of the, I think the learnings that would help me figure out the types of profiles to hire. When I went to sales leaders, you can imagine, again, I'm pretty bought into this. Sales is a science. I was looking for a leader who had the same belief there in that type of system there. So that would generally how I would think about it. And then, of course, as they onboarded, then my role changed, right? I didn't have to be the one, creating 500 LinkedIn messages every week. Somebody else would be able to do that. And then I would be able to solve a different part of that problem and move on to go solving those other parts of building up our go-to-market here.
What about the domain experience of the individual? Were you, as somebody that was very bought into this, were you more interested in their sales process rather than their experience? When you were looking at some of those soft skills, what sort of, what was your thought process there?
This has definitely changed over time. I definitely used to think there was a much bigger advantage having the domain experience. Like, hey, if I could hire a person that came from selling observability software, in my mind, like, hey, like I don't have to ramp them up as much. They would be able to hit the ground running. They may know where dead bodies are buried if they come from a competitor and things like that. And I think I definitely probably overvalue that initially because it also comes, I think, with the downside that they may already have preconceived notions of the space and they may not actually take the time to learn what's unique about your product and how you're differentiated with the competitors in the space. And I think, if I look across the last few years and if I look at our successful reps or leaders here, we have probably equally as many that come from the domain and don't come from the domain. And I haven't really found that that's given an advantage. Definitely not a disadvantage, but I haven't found that that's necessarily an advantage. And we've also had reps that come from the space and don't do well here and don't come from the space and don't do well here. So to me, it didn't, as much as I initially thought it would be a big advantage, actually turns out not to be potentially an advantage there. Also for Chronosphere in the space that we're in, it's not greenfield. Everybody, like a company we go and engage with, they have observability. You almost don't have to convince them they need this product per se. You need to convince them why you need ours versus their existing product and what new pains are happening in the market. And that is pretty explainable without having like 5 years of experience in the space. And I think if you can't get your messaging down to a point where that's pretty explainable, then that's probably a sign that it's going to be really hard for you to scale up your go-to-market team in motion.
Obviously, you've got you're selling into very large enterprise customers, right? That's your ICP. And then the journey of selling into big, large, complex organizations. And then when you start to apply the playbook over the top of that, in order to do big, large deals, you need to build multiple champions within organizations, right? And so obviously your experience very much, as you admitted at the very beginning part of this, your initial approach was selling into people in a similar sort of position to you, right? The observability team and the engineering teams. Help us understand that process of then actually increasing your mindset to think bigger about the bigger business picture, and how did that learning, and how did that present itself to you, and how did you learn about that type of stuff?
Yeah, I think that's definitely shifted, and I would say we're definitely targeting large enterprises for sure. We also target a lot of, I would say, large tech companies there, and I'd say both types of organizations are quite different. If you look at a tech company, generally, their engineering and the infrastructure is all consolidated. They don't have it broken up by lines of business or anything like that. And I also find that those customers already recognize the pain. We don't have to sort of show them about it. They recognize it already. And when we have that conversation, it's almost demand fulfillment as opposed to demand creation, right? This is a concept that one of my advisors, Jeremy Duggan, talks to me about all the time. And I think, when we go into these tech companies that do have large containerized environments, they're already having the pain. They're actively seeking a solution, and we're sort of fulfilling that demand with the ideal solution. Great. There is, and you can imagine, a lot of conversation about the impact to the business because they've already made that connection themselves, and we don't have to sort of show them that or convince them of that, and generally it becomes a potentially an easier sell there. Now, as you go into larger enterprises that are not these big tech companies, you can imagine they're just a bit behind on their journey of container. They're earlier in that particular journey there. The pains aren't as obvious when you talk to them about it. It is something that logically makes sense, and they know they're going through this change now, but it's not a burning pain today. So in those type of opportunities, I would say it's more demand creation. We need to go and really make it known that, even if it's not your top priority today, this is the journey you're on. This is what's going to happen in the next year or two. And this is what you're going to run into. These are the pains. And I think in those opportunities also then, because the pain is not actively there right now and may not be burning today, tying that back into the business value perhaps is more critical as well. So, we do both of those, I would say, and I think just the place where the market is, there are portions of the market today that are already there, and we're just fulfilling demand there, and there are portions of the market that are going to get there soon. And what we want to do is not just wait for them. We really want to go and proactively go out to them and create that demand as opposed to just wait for demand fulfillment, right? Because it's a very competitive space that we're in.
I want to take this opportunity to ask you all very kindly to go and hit the subscribe button. Whether you're on YouTube, iTunes, or Spotify, it will mean the world to us if you could hit that subscribe button. It means we can continue to bring you great content and will ensure that you don't miss out on any of our great content.
I want to just talk a little bit about some of the kind of the setbacks and the challenges that you faced along the way, especially kind of the early days, because there's no founder journey or kind of establishing a company which goes straight curve. So what were some of the setbacks and what were the learnings from those?
One big learning, especially on the go-to-market, I mean, you can imagine a lot of setbacks and a lot of learnings along the way for sure. I'd say when I focus in on sales and the go-to-market side of the house, I think, one of the mistakes we made probably around the 2021, 22 timeframe was, we had the initial traction and things were just exploding up and to the right. I think, once we hit $1 million, I think we got to like 18 within 12 or 13 months or something like that. It was just like, it was a crazy ride then. And it was also because we had, you can imagine, because it happened in such a short period of time, you can imagine the repeatability, the scalability was not quite there. But because the demand was so high, we decided to get ahead of that demand, right? And so you can imagine we, took the typical playbook and said, okay, well, what is the the productivity we need per rep, how many reps do we need to go hit that. And we definitely probably scaled up the sales organization, the go-to-market team, probably too early and too aggressively. And the thing for us is, there is definitely plenty of opportunity in the market, but because we're riding a disruption wave, it's almost like how quickly the market is being disrupted is a little out of our control, and we almost need to grow in at the same pace of that disruption window. If you get ahead of it, you can imagine try to go to every organization, every enterprise out there. A lot of them are actually, especially in 2021, a lot of them we're not trying to solve this problem at all, right? So I think for us, we probably did what would logically make sense based on the demand that we had back then. We probably scaled up the team way too early, and I'd say the result of that was, you can imagine, even though the company number was growing and our top line was growing, there were not a lot of successful reps here. The participation rate even was probably low. And it was a bit of a feast or famine, or like a hit and miss type of situation that we created, which was not great, I would say, for the team. That's been a big learning. And, even like this year, as we went to this fiscal year, we, revamped the commissions plan again in quite revamped it so that it's quite different this year to sort of incorporate the learnings that we had over time. And really, right now, you can imagine compared to 2021, 22, we actually have a leaner team, but a team where the participation rate is like over 80%. Our rep productivity is like, I think, almost $3 million a rep. Like, it's just, there are things that are far more scalable, and not just scalable, but scalable at like an individual rep level as opposed to just the company level. And it feels like better foundations to scale up versus back a few years ago. So that was definitely probably on the sales and the go-to-market side, one of our biggest learnings and mistakes that we made.
As a founder, how conscious are you about the success of your reps compared to the top line number?
I am very conscious about it, because I think in our world, you can imagine big deals like our average ARR per customer is like $1.5 million. Our ASP is, I think, like 670,000. Those numbers are only trending up, right? So it's a enterprise type of business, but I think these numbers are even larger perhaps than what you would typically find in an enterprise B2B company, right? But along with that, you can imagine fewer number of transactions per rep, right? And the sales cycles are, probably between 6 and 9 months, which is relatively long, not too crazy, but like a relatively long. And you can imagine that type of model, if we don't obviously as a company, we care about the top line growing, right? But I do care about the scalability and sustainability of that, right? So you can imagine with these type of sales cycles, where we're hiring and ramping folks, and might take them, you can imagine a few months to get ramped before they can even start doing a sale. 6 to 9 months average sales cycle is probably a year plus before they close the deal, right? And you can imagine that type of world where if we're not able to make a lot of the reps successful here, I don't see why as an individual rep you would potentially want to stick around, and then we're going to have to go through that process again. And the cost of not having a successful rep is not as easy as, we'll just hire another one. Like the time lost there, we're talking like potentially years. We're talking somebody ramping up. We're talking like, starting a new recruiting and hiring process. The cost of, and not necessarily a bad hire, but a hire that was not successful here is a lot more than what it seems. So I think from just a pure sustainability perspective and ability to scale, it matters a lot, and as much as the top line growing. Obviously, the top line of the business has to be there as well. You can imagine if that's not growing, probably tells us that there is no product here, there is no problem to space, there is no problem to solve in this particular space. So that's obviously important, but I think for different reasons. And really, you can imagine we're really building for scale and longevity as opposed to just those numbers. I'd probably if you were to ask me to trade a little bit of top line growth for more successful number of reps here, I'd probably trade in that particular direction, because I know it's going to set us up better for the future, as opposed to just a higher top line growth this year is probably short-term gains for a long-term pain potentially.
When you're in amongst working with big large deals, and that is your only or main source of revenue, now how do you ensure that you've got the right people in those seats, and how do you ensure that you're going to end, the results are going to end up favorably rather than unfavorably and go the other way? Because obviously it's quite risky. Normally the organization has some run rate business with some of those more transactional deals, which at least keeps things ticking on. I think there's multiple questions I've got around this, which is how do you kind of deal with that kind of risk, but also how do you manage that to ensure you de-risk that?
It is an interesting problem, and I think this is not a very common problem. I don't know if you both agree. It's not a problem that a lot of companies have to run into, and I think this is part of the reason why I do get to work with a lot of great go-to-market advisors, because they're also quite intrigued, because it's such a rare situation where we can close and land like an 8-figure deal, which is great at a stage this size, but like to your point, there isn't potentially a typical transactional business there. And for me, I go back to, when I look at that problem, I go back to, okay, are we doing something wrong? And is there really a bigger opportunity in the more transactional side of the business, or is there a bigger market opportunity on the top end of the market? And what I go back to is, our original product market fit and thesis was actually the bigger the environment is, the better our advantage, the bigger the pain is, and the bigger our product advantages are. So generally, you can imagine our win rates actually rise the bigger the deal is. The return on investment is actually higher because, yes, they're more effort, but they're not quite as much effort for the cost there. So the first thing I look at is like, are we doing something wrong? And should I really have a transactional business instead? And when I do that sort of calculation for us in the space that we're in, the answer for right now is no, actually. So two things that we're doing right now. One is, you can imagine one way to de-risk is to just have more big deals in the pipeline. So rather than depending on one, if you depend on 3 or 10 per quarter, that's one way to de-risk this big deal business for sure. And that's one thing we've been doing. And the other thing is, when we talk about the more transactional business, for us, it comes from 2 sources. It either comes from actually the bigger enterprise that we were talking about earlier. Actually, what ends up happening is those enterprises are actually not making we're not actually getting the big transactions from those big enterprises because they're pretty early on in their journey. So we're actually finding that it's a long sales cycle, but it's a smaller transaction value at the end of that sales cycle. And you can imagine maybe the return on investment is not as high, but we know that for that enterprise, if we're in there, they are containerizing those workloads at a particular pace. It's not that we're depending on that business to grow. We just know that containerization is happening. So it's almost like your typical land and expand. And so I think putting the energy into the land and expand is worth it. And that's going to fuel growth there. The other part of our more transactional business, I would say, are smaller tech companies or earlier stage tech startups. And I think if I look at that side of the business, it's a little bit more hit or miss, right? It really depends on whether that business is going to make it or not. And some of them do, and they go on to become $1 billion plus, and we grow that account. But a lot don't as well. So there is a transactional side of the business there for sure. For us, it's really focusing on those enterprises, because I think that's a better bet in the long run there. Of course, we still do some smaller tech companies as well, but generally our bet is probably less on that side. And then, of course, the other thing is, because it's not just the averages that we talked about, our small deals, like for Chronosphere, we don't do deals less than $100,000 a year. That's like our small deal, right? Like that's our SMB segment of the market, right? So, for us, it's because the growth rates, like we're now doing quarters, into the 8 figures of new ARR, per quarter. Just the number of transactional deals you need is so large to make up for that. We definitely cannot just depend on, I would say, the small transactional deals. We're still doing them. We're doing them in the enterprise for the future. But the rate at which we're growing, we do, also need these larger transactions as well. And again, on the larger side, that's where actually the win rates go up. The value is there. So it does, feel like something we are still going to capitalize on for the next few years, for sure. But yeah.
So what's the vision for Chronosphere going forward? Help us understand the journey, the direction, and what you're working towards and what the future holds.
One of the things we have been doing is we've been adding more and more capabilities and more use cases to be solved into that platform. So even though we sell one platform, actually years ago, we started with just the metric data type. So it was just more for infrastructure monitoring type of use cases, right? And then a couple of years in, we added more of that APM application style distributed tracing capabilities there. About a year ago, we added log management capabilities there. So we have been expanding the capabilities of the platform. Along with that, you can imagine there are actually more use cases we could solve in an organization and more other solutions we could displace there. So that's also adding to, like I talked about some of the sizes of the deals. They're also growing really rapidly, not just because of their business growth, but because we're adding more and more use cases that we can go solve. So there's a natural expansion possibility there. So that's definitely one more shorter term focus, is there are more value we can bring as part of an observability platform there in probably the near future. If you think about the far out future, let's say like 3 years plus or whatnot, I do think that generally a company at a certain point, and we're not there yet, but generally a company at a certain point, you have the product for a certain segment of the market, and you go, if you're lucky, you go and dominate that segment of the market. And generally you're at a point where you need to increase that TAM. You need to increase the segment of the market you can go after. And normally it's either you go after a different segment of the market. So you can imagine if you start in enterprise, you go after the bottom end. If you start on the bottom end, you start moving to the top end. That's one natural way to expand that. Or you move to a completely different market. And when I think about that for Chronosphere, one of the things I think about is like, if you were to move to a different segment of the market, I actually think that's really hard for a company. It feels like it's easy because like, hey, it's the same product, you're in the same market, you're just going to a different end. I actually think it's a lot trickier than that on multiple fronts. Like I mentioned earlier, we've optimized the product for the top end of the market. So for the bottom end, it's not the right product, right? The bottom end of the market, for example, doesn't care about cost efficiency much. For us, it doesn't care about that as much. It doesn't care about scale. It doesn't care about performance. It doesn't care about reliability. So like you almost need to build an entirely different product. Even though it's in the same space, you almost need to build a different product for a different end of the market. And you may need different engineers and product managers to build that product, right? On the go-to-market side, it's probably a different go-to-market motion that unlocks the other end of the market for you. So you almost need to rebuild a different go-to-market team. And some companies do this, but honestly, at that point, you're sort of building, in my mind, two companies. You're not really keeping the DNA of your go-to-market motion. You're not keeping the DNA of your R&D team. You're almost building a second company just for a different end of the market. And it gets a little confusing. Do you have two products that compete with each other? Do you have one product that tries to do it all? So actually, even though it may sound logical for a lot of people that that's the next step, I actually think that's a pretty big change for an organization. And you're really talking about changing a DNA. Another way of approaching this is potentially going to a different market. And I think if you go to a different market, in observability, potentially, and if you look at some of the incumbents in the space, the next adjacent market might be security, for example, might be a adjacent enough market that you may want to explore. And perhaps some of our incumbents are exploring, features and products in those markets. I actually think that's also a little bit tricky because, you can imagine the DNA of a security company is also very different from the DNA of an infrastructure company, right? So the way I think about it is like, is there a way in which we could keep the DNA of the company and the teams and the people that we have built here, yet to build a product where you can keep that DNA and be successful? And for us, it's a longer term vision of building infrastructure-based products that are probably still geared towards the top end of the market, because that's just the go-to-market DNA we have here. That's the motion we have here. And that's the R&D team we have here are better at building infrastructure products for the top end. So it's keeping those properties and those DNAs, but building new products in those spaces is how I think about expanding beyond what we do today, as opposed to some of the other options out there.
What would you say were some of the biggest and most profound things that you've learned in your journey? And I mean, the ones which have had the biggest impact in your career so far?
This is my first startup. I think one of the things I learned about a startup is I'm still amazed every day. And like, people say this and they say like, startups can disrupt because you can do a lot more with a smaller team. Like it's a saying that's pretty common out there, but I still get amazed every day where recently we had a pretty small R&D team, like less than 10 people, build a brand new, I wouldn't say product, but build new capabilities. And that small team ended up in a large 8-figure deal against an incumbent that was a public company that's worth billions of dollars, has thousands of engineers. that still surprises me that we're able to be able to do that, and startups are able to do that. Everybody talks about it, but like when you actually logically think about it, like how is that possible? How is it possible you can have a team that's like 100 times smaller and like no distribution advantage, and you can go and do something like that? I think is one of the big things that have surprised me, I would say, and seeing it in practice every day continues to be surprising. And for me, one of my learnings from that is I think there's something about working at a startup and being so close to the business, where I imagine those 10 folks in R&D and the small go-to-market team we put around that operated so close to the business and had the ability to impact the business, where the same 10 people in a much larger organization just don't feel that ownership or empowerment. And I think the effects of these things, it's the same, probably the same, people with a very similar resume and experience and skill set, but putting them in that position and allowing them to go do something like that, I think it still surprises me. As a founder, I tell people, I have 2 young kids, I tell people I treat Chronosphere like a child. Like it's actually, Chronosphere is my firstborn, and then I have my 2 sons that came along after that. And I think that's the mentality, at least for me, is like the company is like a child of mine. And when, I don't know if either of you have children, but when you have a child, you do, as a parent, you'll do anything for it. There is no, I'm too tired. There is no, I won't go do that. Like that's the sort of, I think, mindset that perhaps founders have. And that also enables you to do, I think a lot, because it's not even an option. It's not even whether you want to go do that. You have no choice. Like if the company needs this, just like if your child is sick in the middle of the night, like you're going to get up, you're going to take them to the emergency room. You just have to do it. I think that's also something that, and again, I'm a first time founder. I've always worked hard, but I think there's a different mentality, as a founder and how you treat the company there. So, I think those are probably 2 learnings for me personally.
Amazing. You're obviously expanding. You are growing right now, or going through, some hiring. If you're, at the top of your game, you're an elite sales leader, an elite sales, practitioner. Why would someone want to join the Chronosphere journey?
I think it's probably a bit of a unique. I hope it's a bit of a unique situation for what's available in the market, where you have a combination of the types of deal sizes that we've been talking about is, I think, unique. And I think that's representative of the value we are bringing to our customers. An enterprise not signing 7 or 8 figure check for shelfware. That just doesn't happen these days, right? So I think it's a product that is proven to bring real value in a market that is huge, right? It's a really, like, observability is probably, next to security, probably some of the largest markets in the world that you could disrupt. The observability market's actually going through a disruption phase right now, with the shift to containerization. Like those things, like you can't time. It's not up to us that's causing that. That's just a trend in the market that we are disrupting. And what's happening is it's a large market, and if I look at the containerized workloads, that market's about 5 billion today. In the next 3 years, it's going to double. And it's not because the market's not naturally growing. It's because it's cannibalizing the existing market and shifting to the new workloads there. And along with that, I think folks get an opportunity to work with the companies that are at the bleeding edge of the market, as opposed to the lagging end of the market. So I'd say like those are probably perhaps a unique combination. Then finally, I think generally of a company at our scale, I would imagine, you would expect a go-to-market organizations of hundreds of people, perhaps, and we don't. We're much smaller. We're much leaner, which I think allows for a lot more growth opportunities, I think, for both reps and leaders here. So that might be unique as well. And this year, I think probably 25. If I was going to guess, probably a quarter of our reps will make more than $1 million in commission. I think that's probably also a rare occurrence for companies. So I think there's a few of those unique things where it's probably different enough from the other opportunities in the market today, and hopefully attractive for folks who want to, you can imagine, join a go-to-market organization that's still relatively early in its scale-up phase, yet has the business, both top line as a business and also individual deal size that probably, would normally have a much larger go-to-market organization behind it. So that combination is hopefully unique and attractive for folks in the market right now.
So the observability space, as you said, is a huge market, and lots of people that we've spoken to, when it comes from a recruiting perspective, will always say, "Oh, do I really want to get into observability? It's a very crowded market." What's your take on this, and why have you built something that really does have key differentiators?
I think that is the general thought out there is it is a really crowded market. And I would say because it's not new, it's been a market that's been around for a very long time. And generally when that happens and it's a big market, there are a lot of competitors for sure. One of the reasons why we are different and why we even started the company was, this is a thought for me and my co-founders, like it's so crowded, like do we even have a wedge into this market? And I think what's unique about what we built and it's really the pains that the market is going through right now. So, we talked about earlier that everyone is containerizing. For sure, that's just a trend outside of observability, not really related to observability. However, as you do that, one of the unintended side effects and effects it has on observability is actually quite substantial. So you can imagine, for observability, we're measuring, your applications and the infrastructure. And when you make this switch, what ends up happening is the volume of observability data grows in order of magnitude. And I think people don't really think about that because, for an organization going through that, they're still really paying for the underlying compute, and that doesn't really change. Nobody really charges for you to run a containerized architecture or Kubernetes. So the cost dynamics of the cloud infrastructure is the exact same. But all of a sudden, perhaps your Splunk bill or your Datadog bill just went up in order of magnitude, relatively. And I think that's the effect of this increased volume in data. So one of the ways in which we differentiate is we go and solve that problem in a pretty unique way. And the way we go solve that problem is actually showing these companies what data is valuable and not valuable, and asking them to only pay for what they actually use and what is actually valuable. So it ends up solving that cost problem, but in a pretty unique way that's sustainable. So that's one problem in the market that everyone's going through there. And I think the other thing is when you adopt these containerized environments, it's just far more complex to figure out what's going on. And so, on one hand, they get really expensive. And the other problem is your existing tools are getting worse at solving the problems. So the way we differentiate at the top level is we solve the cost problem in a relatively unique way. And also we provide a solution that's more effective at solving problems in these modern complicated environments as well. On average, our customers are reducing the number of incidents by 75% and reducing the time to detect and resolve incidents by about 65% or so. So, it's a nice combination of, you can imagine an existing category and existing companies all have solutions in this space already. So you don't need to convince them they need to buy observability. They have solutions already. And their pains are it's way too expensive today and they're not as effective. And our differentiation is we'll make it more cost efficient and it's a more effective tool. So for the problem that the market is actively going through right now, we just happen to have nice solutions to both those problems. And that is part of the reason why we're getting so much traction in the market today.
I think the market is from a complete adoption of the Kubernetes and the way in which we're talking about modern architecture. We 75% there, or whereabouts are we on that journey?
It is so early in the journey. And I'll tell you what's interesting is I'll say most new companies start off containerized from day one. So if you look at new startups, especially these AI startups, yes, they have GPU chips, but normally their application tier is containerized from day one. So you can imagine at least all net new workloads generally start off in this fashion today. However, the long tail in the enterprise, that's actually, we're so early in that journey. According to Gartner, about maybe 20% of the workloads are containerized today. In the next 3 years, that's only going to get to 30%. So we're pretty early in that journey. However, because the market is so large, being pretty early in that journey, you know, that 20% still represents a multi-billion-dollar market there. So it's still in the early innings, especially in the enterprise. And I think this is the thing for Chronosphere is, you know, we want to be able to meet them early on in that journey and sort of like help them along that containerization journey and hopefully meet them earlier as opposed to later there.
So as part of the first series, the 33 CXOs, at the end of every episode, we asked a question to the CROs, and obviously they will have, you know, bias to this. But the question was, does the hunter make the unicorn? The hunter being kind of the salespeople, the sales process, you know, the whole point, the whole emphasis of sales execution. Does that make a $1 billion valuation company, or is it the product? Where do you sit in that debate?
I would say it depends. I think for us, with, you know, our type of motion and the segment of the market that we are going after, the hunter makes the unicorn, right? Going after the top end of the market, selling on value, selling big deals. I don't know of a PLG way to go do that. So for us and for Chronosphere, the hunter makes the unicorn. However, you can imagine if we were a business going after the bottom end of the market and it's PLG led for some reason, I think the unicorn makes the hunter there, right? Like, you know, I don't want to say there are folks out there collecting checks, but if the product is really doing that virally and the end users are paying for it, I think the product makes or the unicorn makes the hunter. But for us, it's definitely the hunter makes the unicorn. So the answer, I think, depends on the strategy of the business. And yeah.
I love that, and I think we should definitely start asking that question. But I think you've raised a very valid point, which is there wasn't a lot of organisations running PLG motions when we started doing this podcast, because I think that actually does add a very, very different perspective to this. But
for sure, and you know, you can imagine. I think those are also. And again, I don't want to downplay that, but like I think it's very obvious when you look at those organizations, and you're like, well, clearly it was the product and the PLG motion that made it. So like I don't know if it takes away a little bit from that go-to-market leader, perhaps, of like if somebody else was there, would it really have made, you know, as much of a difference? Perhaps, like, you know, I don't know. We don't run that motion, but for me, it's definitely the other way around.
So, Martin, this is a point where we reflect on what's been, you know, a great session. We are really, really grateful to have you on the show with us today. And I suppose just kind of going back through your journey and talking about, you know, where you came from, you're almost quite humble in just how open-minded you are. And, you know, the way you communicate is almost like it's just a given that, you know, having that really inquisitive mindset where you're just trying to absorb and learn and develop and sponge from so many people around you. And also, you know, there are a lot of people that can give you the wrong advice, but I think you're definitely, you know, what's evident to me is that it's so natural to you to just be that way. And so earlier we were making the point of when, you know, VCs or investors are looking to put their money into founders, they are looking for the right types of leaders or the right types of founders to kind of invest their money. But you can see that the reason you've had the success is because even though you had a hypothesis, which was a really strong hypothesis, because you sat in the shoes and you experienced that pain. So you can empathize with that. You didn't go in there with a closed mindset to say, all right, we're going to solve everything. You were still so open-minded to really develop and nurture that. And the success that you're continuing to get is because of the further iterations of your learning and your journey to get you to where you're going. And so we've got no doubt that Chronosphere is going to be it already is a big success, but relative to, you know, what it can become, your future is definitely very bright. So again, I want to say a massive thank you to you, and we've really enjoyed the session today.
I think it is. I'm lucky that I'm a first-time founder, so it's not like I came in with any bias there or strong opinion. So I think that definitely, I think, helps. And then to your comment on the potential bad advice, I don't know if it's bad advice, but what I see sometimes is there's a lot of survivor bias. There's a lot of like, you know, one CRO or one founder that found one way to solve a problem. And I think they assume that that one way that worked for them will work. And I think maybe there's too much placed on just skill and execution. And perhaps, we all need to realize there's a huge chunk of luck involved in all of this. And, the one way that may work for somebody else may not be the right way. And I think for me, that's always one thing I keep in mind when I talk to folks and get advice is like, that's one perspective, and how many experiences are they drawing upon to come across that perspective, and like take it with a little bit of grain of salt more than anything else. And again, it's not bad advice. I think you just got to always put it in context of their experience and how they came about to that advice. And I think for me, that's one of the reasons why, I mentioned Jeremy Duggan earlier. That's one of the reasons why I was so drawn to him, because I noticed in my conversations with him, it's not one experience he's drawing upon. He's had a lucky career where he's had 5, I think, back-to-back unicorn exits. You can ask him. I can't remember what the stat is. But I notice when I do talk to him, the advice comes from different experiences, and there isn't survivor bias there. So I do think there is a piece of that. And, again, it's not bad advice. I think people just need to take advice from like, okay, let's put it in context. Let's try to think about that. Is that really advice that is applicable to us and to me right now? And put it in that context. But yeah.
Absolutely. Yeah, no, Martin, it's been an absolute pleasure. And it's just, I found myself leaning in on so much of this. And, it's just been such a natural conversation, and just, exploring your journey. I'm sure this is going to add so much value to other founders. And I think the only point to add that I think you can owe a lot of your success to is the fact that you've not, this is a big problem, as you've suggested. And, you can, as an engineer, if you only focus with your engineering hat, you can go and try and solve all these problems at once. And if you're trying to solve all the problems, are you ever going to be the master of the one problem that you're trying to solve? And I think, a lot of your strength comes down to the fact that you have been very maniacally focused on this, this big problem, and it's a future problem that everybody can see, and it's there, right? And so, sticking to your lane, sticking to what is important.
Thank you. I agree.
Well, to all our listeners, thank you so much for tuning in. If you like what you've heard, please do subscribe to our various channels on iTunes, Spotify, and YouTube. All the links will be in the description below, and we look forward to welcoming you back for another session very soon. Thank you and goodbye.